Part 1. Foundations of Power. A low hum, a pulse, the invisible heartbeat of the global financial world. Money, but not the money people hold in their hands. The deeper kind. The kind that moves silently through wires, agreements, promises, and debts, shaping nations, breaking economies, and deciding futures long before the public ever sees a headline. This is the story of an institution that has survived every war, every depression, every market collapse, and every scandal. An empire that has fallen many times, yet has never stayed down. Citibank. To understand Citibank is to trace the architecture of modern capitalism, to see how a single institution can influence governments, industries, and billions of lives, without most people ever realizing it. This is the true story of how Citibank became one of the most powerful financial forces on Earth, not simply a bank, but a pillar of global control. The world that needed a bank, the year is 1812, the United States is young, fragile, untested, still trying to understand what it means to exist as a nation. New York City is not yet the beating heart of global finance. At this time, the world's economic power is still centered in London, controlled by the mighty Bank of England, surrounded by aristocrats, merchants, and empire. But the United States needs its own structures of capital, its own engines of credit, its own gateway to foreign markets, and most importantly, it needs stability, something rare in this turbulent new era. So, in the midst of war, literally during the War of 1812, a bank is formed, not simply to hold deposits, but to act as a national instrument of financial identity. It is called the Citibank of New York. This is where the empire begins, not with grandeur, not with skyscrapers, but with necessity. Because nations are not built on pride or speeches, they are built on credit. And Citibank, later known as Citibank, would become the great servant and master of credit. The first power broker. Early on, the Citibank of New York is heavily connected to merchants. These are not casual traders. These are elite shipping magnates controlling trade routes across the Atlantic. In the age before industrialization, power flows through oceans. Whoever controls shipments of goods, raw materials, and commodities controls economies. This bank is born into that world. One key figure stands out: Samuel Osgood, the bank's first president. Osgood was no ordinary banker. He was a statesman, member of Congress, and part of the political fabric of the nation's founding government. His presence signals something critical. This bank is not merely a private business. It is an extension of national power. It is positioned at the intersection of politics, commerce, war, international trade. From its inception, Citibank is designed to influence the direction of a nation, and with time, it will come to influence much more. The story of expansion. As the United States grows, so does Citibank. Into railroads, into manufacturing, into the westward expansion that transforms a frontier into a continental power. By the late 19th century, New York is rising, and with it, the financial world shifts from London to Wall Street. Citibank evolves alongside this transformation. It becomes the Bank of American ambition. But with growth comes risk, and with power comes danger. The late 1800s and early 1900s are a time of financial instability. Panics sweep through markets like storms. Banks collapse frequently. Ordinary people lose their life savings. Even mighty institutions tremble. But Citibank does more than survive. It positions itself strategically, moving closer to the new epicenter of American power, the corporate industrial elite. This is the age of steel, oil, rail, and electricity, industries ruled by names that still echo today. Rockefeller, Carnegie, Vanderbilt, Morgan. If these were the kings of American industry, then Citibank would become their advisor, their financier, their strategist, a banker to empires. The rise of National City Bank. By 1895, Citibank takes on a new identity, one that reflects its ambition. It becomes National Citibank. This is more than rebranding. This is a declaration. A bank that was once a New York institution now intends to influence finance on a national scale. But it doesn't stop there. National Citibank becomes the first major American bank to aggressively expand overseas, not simply supporting international trade, but actively shaping foreign economies. It opens branches in Cuba, Argentina, Brazil, Mexico, China. Wherever the United States gains influence, National Citibank follows. And wherever the bank goes, financial systems bend to its structure. This is not merely banking. This is economic diplomacy, and sometimes economic conquest. Enter the architect of empire, James Stillman. No figure looms larger in this era than James Stillman, one of the most powerful bankers in American history. Stillman is a strategist, a man of quiet influence. He understands what many do not. Power is not held by the one who spends money, but by the one who controls credit. Under Stillman's leadership, National Citibank becomes the lifeline for some of the most powerful corporate monopolies in the United States. It provides financing to the Standard Oil Trust, one of the most infamous monopolies in history. The trust, controlled by John D. Rockefeller, doesn't simply dominate the oil industry, it controls it. Rockefeller's fortune would eventually be valued at over $400 billion in today's dollars, making him the wealthiest individual in recorded history. And who manages the financial nerve system behind this empire? National Citibank. If Standard Oil is the industrial titan, National City is the shadow general. This connection will define the future of American capitalism. A bank, quietly sitting behind curtains, enabling dominance. The lesson becomes clear. Empires are rarely built alone. They require architects. National Citibank is one of them. World War I, the bank becomes a global power. When the world plunges into World War I, nations require financing on a scale unprecedented in human history. War is expensive. Bullets cost money, cannons cost money. Ships, food, trained soldiers, all require credit. And National Citibank is ready. It becomes the main distributor of war bonds, the financial instruments that allow governments to borrow from the future to pay for the present. The bank moves billions of dollars, and with every dollar, influence grows. When the war ends, the United States emerges as a global financial superpower, and National Citibank stands at the center of this transformation. It is no longer merely a bank. It is a world institution. The Great Depression, the first collapse. But even empires fall. The stock market crash of 1929 sends shockwaves across the world. Banks fail by the thousands. People lose savings, homes, hope. And National Citibank does not escape unscathed. In fact, it becomes a symbol of the excess and speculation that helped create the bubble. Congressional investigations criticize the bank's aggressive practices. The public grows suspicious. New regulations are created to prevent banks from dangerous investment behaviors. National Citibank loses influence. For the first time in its history, the empire cracks. Yet it does not break, because Citibank, as it will soon be called, possesses something few institutions ever achieve: the ability to reinvent itself. The birth of Citibank. In 1959, the bank rebrands once again, this time to the name the world would come to know, Citibank. While the name is modern, the direction is ancient. Expansion continues. But now, Citibank does something different. It moves into the lives of ordinary people. It introduces the first successful consumer credit cards, the first 24-hour ATM network, modern global wire transfer systems. The business model for international branch banking Citibank becomes not only the bank of corporations and nations, it becomes the bank of everyone, the bank of daily life, the bank of the future, the unseen power. By the late 20th century, Citibank has become more than a financial institution. It is a global infrastructure, a hidden operating system running beneath international trade, currency markets, corporate finance, government debt, consumer banking, global investment flows. With every wire transfer, every credit transaction, every government financing deal, Citibank embeds itself deeper into the foundation of modern civilization. To remove it now would be like removing the roots of a skyscraper. This is how power survives, quietly, invisibly, by becoming necessary. Part 2: Crisis, Reinvention, and the Age of Too Big to Fail. Power, once gained, is never secure. It must be defended, managed, reshaped, hidden when necessary, revealed when useful. By the mid-20th century, Citibank has evolved into a global financial organism, flexible enough to survive crises, ambitious enough to reshape industries, and influential enough to sway national decisions. But in the decades that follow, it will face challenges unlike anything before. Economic upheavals, political scrutiny, reckless expansion, shadow dealings, and moments where collapse seemed inevitable, yet never came to pass. This is the era where Citibank becomes something new. Not just powerful, but essential, indispensable. An institution not permitted to fall. The post-war world. A new financial landscape. After World War II, the world is reconfigured. Europe rebuilds. Former empires decline. The United States becomes the center of global finance. And New York City, where Citibank is headquartered, becomes the new Rome. International trade expands. Corporations grow across borders. Nations increasingly depend on U.S. credit to stabilize their currencies and economies. Citibank stands at the center of it all. The bank becomes a global intermediary, the bridge through which money moves between governments, militaries, companies, and investors. This is not accidental. It is strategy. Where influence can be gained, Citibank advances. Where markets are unstable, Citibank enters. Where governments struggle, Citibank offers assistance. And assistance always comes with terms. The expansion into consumer life. While Citibank remains deeply entrenched in corporate and governmental finance, it makes a critical move. It turns banking into a consumer product. In the late 1960s and 1970s, Citibank begins aggressively promoting credit cards, personal loans, and consumer banking services. It invests in advertising that promises convenience and empowerment. But this is more than marketing. This is behavioral engineering. Citibank is teaching millions of people how to live in debt and how to accept debt as a normal part of life. Debt is not a burden. Debt is freedom. Debt is progress. This becomes the ideological core of modern American consumer society. Credit enables purchase. Purchase enables identity. Identity enables status. And status drives consumption. Citibank is not simply providing financial services, it is shaping culture. The ATM revolution. In the 1970s, Citibank introduces one of the most transformative technologies in modern financial life: the automated teller machine. The purpose seems simple: allow customers to access money at any time. But the implications are profound. Money becomes abstract, not something held, but something accessed, not a physical asset, but a digital balance. This marks the beginning of the transition from cash to digital finance. Today, we take this for granted, but at the time, it is revolutionary. Citibank invests billions to install ATMs across major cities. It connects them to a global network. It trains entire populations to trust machines more than human bankers. The bank is no longer a place, it is a system that does not sleep, a system that mediates every transaction, a system that becomes unavoidable. The first major crisis, Latin America's debt explosion. In the late 1970s and early 1980s, Citibank sees opportunity in emerging markets. Countries in Latin America, Brazil, Mexico, Argentina, Chile, are seeking financing to modernize infrastructure and expand industries. Economic growth is rising. Oil-rich nations have surplus capital. Dollar loans are plentiful. Citibank moves aggressively. Billions of dollars in loans flood into developing economies. But growth turns out to be fragile. Global interest rates rise, currencies weaken, commodity prices fall. Suddenly, governments across Latin America cannot repay their debts. By 1982, the crisis is unavoidable. Mexico announces it cannot meet its payments. If Mexico defaults, dozens of other nations will collapse. If the nations collapse, the banks that lent to them collapse as well. And among those banks, Citibank has some of the largest exposure in the world. The global financial system is now at risk. Governments, central banks, and the International Monetary Fund intervene. New repayment schedules are negotiated, emergency loans are issued, entire national budgets are reorganized. The message is clear: Citibank cannot be allowed to fail. The world has crossed a threshold. A bank that is too connected is a bank that is too necessary, a bank that is too big to fail. The era of deregulation and the fall of barriers. In the decades after the Great Depression, U.S. law separates commercial banking from investment banking. This is known as the Glass-Steagall Act, designed to prevent the kind of speculation that contributed to the 1929 crash. But Citibank sees regulation not as protection, but as limitation. Throughout the 1980s and 1990s, the bank begins lobbying to remove these constraints. Its argument? Markets are modern now. Financial systems are more stable. Innovation requires freedom. This message resonates with lawmakers who believe in globalization, free trade, and corporate expansion. Privately, Citibank's goal is much simpler: to merge consumer banking, corporate banking, stock trading, and insurance under one empire. In 1998, Citibank merges with Travelers Group, creating Citigroup, at the time the largest financial corporation in the world. There is one problem. This merger is illegal under existing law, but the law does not stand for long. In 1999, the U.S. government repeals the Glass-Steagall Act, effectively legalizing Citigroup's existence. It is one of the most consequential financial deregulations in modern history, and it happens after Citigroup has already broken the rule. This is not law responding to markets. This is law reshaped by power. Citigroup, the financial superstructure. With the repeal of Glass-Steagall, Citigroup now controls consumer banking, corporate banking, investment banking, brokerage services, insurance, global wealth management. It becomes a financial superstructure capable of influencing interest rates, government borrowing, corporate mergers, pension funds, housing markets, international currency flows. Its footprint spans nearly every developed and developing nation. Citigroup is no longer simply a participant in the financial system. It is part of the architecture itself, the subprime engine, the road to crisis. In the early 2000s, the global financial world becomes obsessed with a new form of investment: mortgage-backed securities. Bundles of home loans pooled together and sold to investors as profitable, low-risk financial products. Citigroup becomes one of the largest creators and sellers of these instruments. Demand rises, sales increase, profit soars. But to create more mortgage securities, more mortgages must be issued, which leads to a dangerous shift. Lending standards erode. Loans are given to borrowers unlikely to repay. Housing prices inflate on borrowed time. Citigroup sees the risks. Internal warnings are raised. Yet the machine does not stop, because profit has momentum, and momentum becomes expectation. Then, in 2007, the cracks become impossible to ignore. Default rates rise, housing prices stall, and then collapse. The financial system begins to tremble. Banks panic, credit freezes, markets fall, and Citigroup is caught at the center of the collapse, the fall that was not allowed to happen. By late 2008, Citigroup is failing. Losses reach into the tens of billions. Its stock value plummets. Its survival becomes uncertain. But Citigroup is not an ordinary bank. If Citigroup falls, the global financial system faces devastation. And so, governments act. The US Treasury issues massive rescue funds. The Federal Reserve provides emergency liquidity. Citigroup receives over $45 billion in government support, plus guarantees backing hundreds of billions more in assets. The institution should have died. Instead, it is saved. Not because it deserved to be saved, but because its destruction would be worse than its survival. Citigroup emerges from the crisis battered, yet intact. The empire endures. The lesson Citibank has now survived. The Panic of 1837. The Civil War, the Depression of 1893, World War I, the Great Depression, the Latin American debt crisis, the collapse of long-standing banking laws, the 2008 financial crisis. Most banks in history do not simply collapse once, they collapse permanently. Citibank, however, collapses and rises again and again. Because Citibank is not merely a business, it is part of the underlying structure of global finance. Not a tower built on the foundation, but one of the foundation stones itself. Part 3. The Invisible Network and the Future of Power. An empire is not always seen. Sometimes it is felt, like gravity. A force that pulls, shapes, directs, without needing to be acknowledged. By the beginning of the 21st century, Citibank has become that force. Not a monument of marble and glass, but an algorithm. Not a company made of people, but an infrastructure made of systems. Its branches stretch across continents. Its networks process trillions in transactions each day. Its clients include governments, corporations, pension funds, and everyday citizens. Citibank does not simply participate in the global economy, it circulates it. Money begins here, money flows through here, money returns here. This is where the story of Citibank enters its most subtle and most powerful chapter. The age of financial invisibility, the quiet return after crisis. After the 2008 financial crisis, Citigroup is forced to restructure. Laws tighten, oversight increases, public trust is shaken. For a moment, it seems as if the empire might finally retreat. But Citibank does what it has always done. It adapts. It sheds what is exposed. It protects what is foundational. The consumer banking divisions shrink in public visibility. The global transaction services division grows in silence. This is the part of the bank few outside the financial world ever hear about. It is called Citi Global Treasury and Trade Solutions. This division is not about checking accounts or mortgages. It is about moving money across the world, every hour, every minute, every second, for corporations, for international organizations, for governments. Citibank becomes the central pipeline through which global commerce travels. If trade is the blood of the world economy, Citibank is part of the circulatory system. Its importance is no longer debated. It is simply assumed. A system, hidden in plain sight. Consider this. When a multinational corporation pays workers across several countries, Citibank is often in the middle. When governments refinance their national debt, Citibank is often the arranger, the advisor, the broker. When global corporations merge, split, reorganize, or go public, Citibank is the architect of finance behind the scenes. And when crises emerge, currency collapses, sanctions, trade disruptions, Citibank advises how to stabilize the damage. Not all influence is loud. Some of it is procedural, some of it is structural. The public does not see Citibank in daily life, because Citibank has become part of the foundation that daily life rests upon, like electrical current, invisible until it stops. The bank and the state. Throughout its history, Citibank has not simply interacted with governments, it has shaped government policy. During the Cold War, Citibank facilitated capital flows that supported U.S. geopolitical strategy. During global energy crises, Citibank advised OPEC nations on how to manage oil revenue reserves. During currency collapses, Citibank helped design emergency rescue structures used by the International Monetary Fund. It is not conspiracy. It is alignment. Governments need stability. Banks need cooperation. Citibank learned early that power is not created in competition with the state, but in partnership with it. This relationship remains intact today. When the U.S. Treasury issues new bonds, Citibank is among the primary distributors. When countries negotiate sovereign restructuring, Citibank mediates the lenders. When military alliances require financial infrastructure, Citibank provides the systems. The bank is not outside government power, it is adjacent to it, and sometimes embedded within it. Digital finance, the new empire. As the world moves from physical cash to digital currency, Citibank does not resist the change, it pushes it. It invests in global payment networks, encrypted transaction systems, and real-time settlement platforms. It supports the development of central bank digital currency frameworks. It pioneers automated liquidity systems for multinational corporations. The future of money is not physical, it is data. And Citibank has positioned itself to be a custodian of global financial data. In a world where money becomes information, control of information is control of money. And in this world, Citibank is not shrinking. It is expanding in ways that are not immediately visible, not branches, not skyscrapers, but networks. Invisible, global, essential. Power without obvious shape. Citibank today is not the largest bank in the world, not by assets, not by employees, not by public visibility, but that is no longer what matters. Citibank's influence is measured in financial flows, regulatory access, government relationships, infrastructure integration, strategic indispensability. It has become a permanent component of how money moves. To remove Citibank from the global financial system would not simply inconvenience a few clients. It would disrupt trade routes, credit markets, foreign exchange systems, corporate payroll operations, sovereign debt structures. The world would feel it immediately. The empire has moved beyond the need for walls and banners. It now exists in the wiring of civilization. The question of accountability. Some see this as stability. Some see it as danger. When an institution becomes too integral to fail, has it moved beyond consequence? When a bank becomes a foundation of national policy? Where does influence end and authority begin? When financial power becomes invisible, how can it be measured? This is the paradox of Citibank. It has fallen many times, yet it remains. It has been fined, regulated, restructured, rescued, but never dismantled. Because dismantling it would destabilize more than one institution. It would destabilize the world economy. This is not conspiracy. It is architecture. Citibank is now part of the frame that holds the structure up. And frames do not fall unless the entire building comes down. The closing reflection Citibank is often described as resilient, enduring, adaptive. But perhaps the truth is deeper. Perhaps Citibank has never fallen because it does not exist the way ordinary institutions do. Not as a company, not as a logo, not as a building, but as a function, a system of systems, a network of relationships, a vessel through which governments, corporations, and markets exchange value and power. Citibank did not simply survive history, it became part of it. And perhaps one day, a new system will rise to replace it. But until then, Citibank remains what it has quietly been for more than 2 centuries, an empire without a throne, a power without a face, an institution that never truly fell.